Welcome to Trading Lounge and the US indices for Tuesday, November the 30th, starting with the Russell here. We had this up here as wave 1, but it's pulled back a little bit too far. I mean, technically we could allow it to come back to, a breach of this point here, but yeah, I think we're better off relabeling it like we did. Well, this is what we did yesterday or whatever. Yeah, a bit more sort of complications for this particular market, which, hasn't really been easy through all of this. But yeah, so I'm just seeing the first thing we need to do to see if we get 5 waves in this A wave here, which is starting to look like the probability of that. And then we'll have the B wave and then the C wave here. So it's, yeah, slightly different count. Let's just pick up from where we were yesterday. So I was thinking that, yeah, this A wave here, obviously it could be in 3 ways. We'll just go through this first of 1 and 2 here, and then 5 waves in green here for wave 3, and then 4, and then 5 for wave A here, then the B, and then the C. It's possible that also wave A could be over here, and then we could be starting wave B here at the moment as well. So that's possible as well. So yeah, I'm not too sure here, but it certainly appears impulsive to the downside. I'm just checking over things. Yeah, I'll go back in and check this later, just make sure I've got that right, but it feels okay. So that's kind of where we are really for this. So we've got a lot to work through all of this now, unfortunately. Okay, so for the NASDAQ, we'd been looking at it as wave 1 here. Now, as an A and a B and a C for wave 2. So it needs to be finished at this particular point in time, because a wave 2 is a zigzag pattern, which is an A wave, a B wave, and a C wave, but more so 5 waves for the A wave, 3 for the B, and 5 for the C. So we've basically got those here. We could count this a bit differently as well, but yeah, this is where it needs to stay. Obviously, if this low here is breached, then we'll be coming down further at that point, because that's an impulse wave here. This is also an impulse wave here. I just don't think it's finished, but it's in the box here, close to the 61.8% from the top to the bottom here. So if it's going to fail, this is where it's going to fail from in this 3-wave move to the upside. So let's just assume for a moment that this is actually correct. Then we would need to be long with a classic trading levels pattern sitting on the 16,500. So that means that we need the first high above the level here. So from this little move here, if we look at this as 1 and 2 here, and 3 and 4 and 5 to here, so we'll sort of end here. So any move above this here would be sort of classed as bullish, because otherwise we can look at this as an A and a B and a C wave here to the 61.8%, and then it can drift lower from that point. However, if we get this support up here for this, so yeah, we may get something very simple like, whoops-a-daisy, that's the bearish one. So we want to have a look at the bullish one. So if this is the level here that we're thinking of, the 16,500 across here, we're just talking about getting a top in here. So we would need that reaction and then the first high above the level, and then we can work that high as an entry point, or the second high here. It may drop below the level as well, which is normally the most common thing for it to do, drop below the level. So then we need to pick it up over here. This will also be a classic trading levels pattern. What I mean by that is that this little pattern in here will encompass this whole larger pattern in here. So we'll have the arrival, the reaction, the first high above the level, the ABC pattern in here, and then so you can refine that a lot more. So in a nutshell, if this, if in inverted commas, if this is correct, then we would need support on here on the 16,500, the medium level here, to trade higher at that point. The other point here too that's important, that if the move up here takes out the top of the B wave, which obviously it's very close, but it looks probably at parity at the moment, but let's just say that we get another move up through here. So then what that will do, that will confirm that this is in three waves, an A wave, a B wave, and a C wave at this point. So what it can do from that point is obviously continue to the upside, but if it makes a move up to the 1650 above wave B here and then fails and starts to move down from that point, then technically it's from that low there. But yeah, I mean, it could pull back 61.8% and then move up there as well, so we'll need to be careful about that. So it'll take a bit of time to figure this out, but if this moves up to makes this here, forces this to be the A, the B, and the C, and confirms that, and it starts to move down, and takes the low of this out, well then we've got ourselves a larger correction occurring at that point. And at that point it would not be a wave 2, because a wave 2 needs to be a zigzag structure of 5 waves, 3 waves, and 5 waves. So then we would need to change this count. So currently we've got this count as sitting as wave 1 up here, the same as Microsoft and Google and so on. So we could put, I mean, it's a long way from the box, isn't it, 61, but we could put that in there like that. But to confirm that, we want to get support on the 16,500 at that point. So this is a little bit small for this. So the other way that we've been looking at this as well, so if it touches the 1650 and then drops back, then we need to look at it in a slightly different way. So from wave 1 here, wave 2 here, then wave 1 and 2, and then 3 and 4 here, then 1 and 2 and 3 and 4 and 5 here for the third wave up here, and we come back for the fourth wave. Now obviously we're not seeing, that strong move up there, that strong move up there today or whatever it was. I think on the S&P it showed it moving up on lower volume, so it can certainly be a corrective move to the upside. So let's just see how this plays out. But if we do end up coming down here, then this is what we will need to be looking at. So I'm just prepping everyone for that possibility. So yeah, and we can also look at the SP 500 much the same, and we'll also look at that as well as an alternative count. So with the S&P here, as you may know, we've been looking from wave 3 and 4 here on this daily chart, and then 1 and 2 here, and 3 and 4 and 5 for wave 1. And at first sight here, you could land this the same as the NASDAQ by putting wave A here and wave B here and wave C over here for that. We're a bit closer to the box here, so it's a bit more realistic. Yeah, this ABC that we've got here is not really counting as an ABC when we go in and have a look at the internal structure. It's sort of counting more like it's actually 5 waves coming down through here, so a slightly different pattern. But we'll also obviously need to understand at what point we can go long, but without getting caught out here. So the other count for this here would be looking at this bigger picture here, looking at wave 3 up here with a larger wave 4. I kind of like what I like about this is that just having this extra wave here makes this wave 3 longer than wave 1 now. So that was something that I was always looking for. But is it correct or not? I don't know. I mean, I'm just putting it out there, and we'll just see how this plays out in this space. So we need to understand that space a little bit more. So let's go in and look at that. So the top here being wave 1 or wave 3, wave 5 of 3 there. It's probably a little bit confusing putting that there, so I'll just take that away and just work with those two numbers. So we're going to be working with these two for a while. Obviously one's going to be correct, and as you can see here, there's a really good case for having this as the A wave here, the B wave here, and the C wave here for wave 2 for that. I mean, it looks all good, doesn't it, you know? But it does count slightly different down here. It can be counted as 5 waves, so wave 1 here, wave 2 being a bit complicated, and wave 4 being simple. So, but we need to look at the long side, at what point we can go long as well. So also from the top here to the bottom here, this is the 61.50 and the 61.8%. So currently it's at the 61.8%. It's also in group 2 here. This is minor group 2, so 65, 72 and 80 here. This is where we're playing out here. We really want to see if this could become the support at this particular point in time. But if this count is incorrect, then we'll need to look at it like this here. So having the B wave up here for this, so all of this is the A wave, the B wave and the C wave, and this will make a little bit more sense once you start to drill into this a little bit more here. So just on the hourly chart here, this is where I've got wave 3 here, but the main point here is that we originally counted down here as 1, 2, 3, 4 and 5, or 4 and 5. You have to go to the intraday to check that. And then we were looking for the ABC pattern, so for wave 2, and then we were looking for wave 3 down. So it does seem to count 1, 2, 3. Well, I can take you onto a journey of that on the 10 tick chart, but in a nutshell, wave 1 and 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave and the fifth wave down here. So in this case, it appears that we've got 5 waves down. That means that we would have a rally back in 3 waves as an ABC back into the box here, and then drop from that point. So I think that it's a little bit tricky to, we may have the top in there already for this, putting this B wave in here and having the C wave here, but I think there's one more little push to come up here for this. But we'll check on that. We'll go in and have a look at that. But the top can be in. It's right on the 61.8%, and we can look at it as an A wave, a B wave and a C wave to that point. In terms of confirming this, we would need a move under this area through here. So I'll just put it technically there. That would be the breakdown at that point, because this move up here is, let's just say that it's impulsive, so 5 waves. If we move below the 5 wave structure, well then it negates that structure at that point, and we can look at it as an A and a B and a C at that point. So yeah, in one way or another, in both cases, for this one here, this being wave 3 or wave 1 here, there's the case of 5 waves down for the A wave, the B wave and the C wave to come down here further. So this is what we need to be careful of. So the reality is that if this low, from this low to this high here is 61.8%, it could, like I said, we could get another move up here. But if we got a move up, it will probably hit the 4700 or the trend line, doesn't really matter. It would pull back at that point, but then what we'd be looking for on the bullish move is the first high above the level at 4700. That would create the long trade at that point. That would create the safe long trade at that point, because we've moved past the 61.8% at that point. So yeah, on the tick chart for this, so there's a little bit to mull over here with all of this, but we'll try to round it up once I've sort of finished this a little bit. So up the top here as 1 or 3, we originally counted 5 waves down of 1, 2, 3, 4, 5. So we knew that because we got 5 here, after a correction, that after this ABC here, it's kind of high, it was above the 61.8%, then we'll have another 5 waves. So I've pulled this apart here. There is 5 waves in here, but now you can see that if we looked at this 5 wave structure here as wave 1 and then wave 2 over here, and this is really the complicated correction because the sheer size of it in relationship to wave 1 here. So it's bigger, wave 2 is bigger than wave 1 in terms of time. So complicated, simple for wave 3 and 4 here. and there's 5 waves in here. I have to say, though, the spike down the bottom here doesn't really count very nice. All of this from wave 4 down to here doesn't count very nicely. It kind of counts better putting wave 5 of A over here and looking at this as an A and a B wave here, and then up for the C wave. Still leaves us wave A here, so it doesn't make any difference. But the reason I'm showing this for is that we can count 1 and 2 and 3 and 4 and 5, even though this is a dog's breath here in terms of counting it. So yeah, to the upside here, we need to look at that. So it's gapped here, but we can only assume that there's 5 waves or some sort of thing there for wave A here, and then this is in 3 waves here, so perhaps a WXY here for wave B low here. And I was trying to sort of, because it looks like to me this could be an A wave, a B wave, and 1, 2, 3, 4, 5 for the C wave here. So it's possible to get, as I mentioned, to get another move to the upside here. But we're heading, this is the 61.8% here, so we're already there. This could just rally here in 3 waves here, right, come into the supply zone and fall down at this point. Because I'm a little bit, I did my best to count this in, well, maybe not my best, but I gave it a good shot, try to figure this out here, but I couldn't spend too much time on it. You know, and this move from this wave 2 low in here to this top here brings us in quite close to 38.2% for this, so I'm kind of okay with it, but I understand that it could drop from this point. But it does open up the door for short trades coming, you know, below these lows here for this. Technically this one here, I'm just trying to get a bit closer, because if it comes down here it's only going to bounce off this anyway, and then you need to do a classic trading levels pattern on the bearish side for that number there. That's what you'd be looking at. But so far here we could look at this as an A and a B and a C wave. Yes, it could turn into more of a bearish picture, and that's why you need to short under that point there. So yeah, that's sort of it in a nutshell. So we can go short, just to rehash this a little bit, we can go short with a classic trading levels pattern under this level, under the 4650. Okay, that's the short trade, and the long trade is classic trading levels pattern on the 7,447 at this point. Might get your second one in there if you're lucky, but basically that first high that we're looking for. So they're the two dividing factors that would send us into a bear market or to a more bullish count. So there's a bit of a lot to take in with all of this. Never easy as it looks. But I think I think we need to respect this 1, 2, 3, 4, and 5 here. I have pulled this apart here. We can go to 10 ticks and take a look at it. It's a bit of a journey. This is it here. I mean, I only did it quickly, but if you want to correct me on anything, then please do. So yeah, anyway, you'll need to do a screenshot of that and then work it. But yeah, anyway, the main point was I was just, I wanted to make sure that this, I wanted to make sure this is 1, 2, 3, 4, 5 here, ABC for the 2, make sure all of that's 5 waves in here, not 5 waves all the way down to here. This is a little bit dodgy in here, so how to count that is open for debate. I haven't counted it. I can see that it can be counted in different ways, but the main point is that we had a correction, and how far did that correction come back up? I didn't actually check that, but oh yeah, 38.2%. So that's okay, because that's the way that we've got it. We've got this as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and then down for wave 5 in one way or another down into this point, which is a little bit dodgy in here, but it's been a bit, the new strain has been put a bit of a strain on the market, so to speak. Yeah, so look, that's really where we're at this point with everything. So just to rehash, this, let's just go back to the bigger picture here for a moment. So we've got this up here as wave 1 or wave 3 here. This here looks like it's an ABC pattern, and it looks like it wants to go up there, and it may do that. So what we decided to do was 4,700 would be the biggest number in that area as that price point. So we will look to go long if we get a move up there. If we get that, I'm just keeping it really simple. If we get that, we need to be long at that point. And this is the 4650 area here. So you know that we can, well, I'll just put that under here, but you know from the tick chart, if you get a classic trading levels pattern on, a breach down through that and back up there, then you can also look to go on the short side at that point. I mean, really, it's all about making money, isn't it? And I'm just presenting the safe trades here based on the wave structure. So we need to give it a little bit of space. We don't want to get trapped. It's easy to make mistakes. So let's just see how we go here. So there is space for one more little move up through here, but I wouldn't be surprised if that's it there as well at that point. Now this move up through here, I did look at that on the daily volume, and it looked like, oh no, must have been on another, I don't trust the volume on this, on a CFD platform. Because sometimes with the volume, they don't actually give you the volume, it's just how many times the price has changed, which can be useful to a point, but it's not good enough. We should all complain at once. So yeah, that's the story. So I'll leave it all at that. Alrighty, cheers.